Apple has just released their third quarter results for 2022 and the market is liking it. It is up 3% to $162.20 a share. So what I'm going to be doing today is going through these updated numbers, talking through them, then going to my stock valuation spreadsheet to look at discounted free cash flow models and the Buffett-Graham intrinsic value model to see if Apple is a buy off these updated numbers. Then we're going to be looking at some technical analysis towards the end of the video. So just before we get into that, what has Apple's stock been doing over the last year? It is up 8%. If we compare that to the broader market, it is definitely beating the market. The market is down 7%, Apple is up 8%, and if we go over the last 5 years, it is up massively, 300% compared to 64. So Apple has been a solid buy throughout its life. In fact, let's just go to the max for giggles. Oh man, if only I invested in Apple when I was a lot younger. Anyway, let's not do that. Let's go with what's happening now. So we have the 3 months ended in 21 and 22. So what has happened? Well, products has gone from just under 63.9 billion down slightly to 63.3. So products is down. We'll talk about what makes that up in a second. Services 17.4 up to 19.6. So overall net sales are up 81.4 to just shy of 83 billion. Now, where do we see the categories here? We can see that the product side is obviously the iPhone, Mac, iPad wearables, and then the services. And we can see that the iPhone is still the main driver here, 39 billion to 46. Everything else is down. Mac 8.2 to 7.3, iPad 7.3 to 7.2, wearables and home accessories 8.7 to 8. All of these are down. iPhone is up, but services is up 2 billion, which is why we have the increase in total net sales. Next thing, we want to look at the net income. How do we get net income? Well, it's total sales minus all the costs, and it is down slightly, 21.7 billion to 19.4. Why is this? Well, obviously revenue is up, but you can see the cost of products is up, cost of services is up slightly. This has increased. R&D up $1 billion. General selling, general and admin is up a little bit as well. So overall, that has brought the profit down, brings the earnings per share to $1.31 to $1.20. But what else do we like to see? We like to look at the shares outstanding. Apple are buying back their shares, 16.6 to 16.1. Why is this? Well, because if there are 10 shares of Apple and you own one, you own 10%. If Apple buy one of those shares, you own 9. Sorry, they own 9 and you own one of those. You're increasing your pie of Apple and increasing your share of the profits. Now, next, we want to look at the free cash flow. Now, when I first recorded this, I didn't realize that this was the 9 months, but you can see this is the 9 months ended. So these numbers are the previous 9 months, but I've already calculated out for you when I go to my sheet. So how do we get free cash flow? Cash from operating activities minus CapEx, which is purchases of property, plants, and equipment. And you can see the cash generated by operating activities is up 83.8 billion. Now, this is the previous 9 months, including the current one, to 98 billion. And the CapEx is down slightly, 7.8 to 7.4. So that gives free cash flow of the last 9 months to about 90 billion. So if we go to my stock valuation spreadsheet here, we've got the 90 billion and it was 19 billion in the quarter that they haven't included. So that brings the free cash flow up to about 109 billion, which is higher than it's been. So what we have here is Apple. We have analyst price targets at the top. Lowest price 130 in 12 months. Average is 180 and the high is 210. And with the current share price at around 160, it's still got some ways to go according to analysts. We have PE, earnings per share, beta, shares, dividend, and the yield, 92 cents a share, 0.58% dividend. And we have the previous year's earnings here. And this is the trailing 12 months, not included what we've just got today. No one else has these numbers and I'm bringing you now. So that brings the total revenue, trailing 12 months, 385 billion, net income 99.6, and free cash flow 109 billion. Oh, and here we have Apple's chart. So if we can expand this out to 1,000 days and look at that chart. So let's go to my valuation spreadsheet. What does this do? Well, it takes the discounted free cash flow model and Buffett-Graham intrinsic value model to give the fair value of the stock. Now, firstly, we look at the averages and then see if there's anything we can do on the numbers and tweak them a little bit, because currently it calculates Apple at $113 a share. So let's have a look at this. I think revenue, we look at revenue first. Revenue is increasing steadily, revenue growth rate. Now, we did have a bit of a blip here in 2021 where it went up 25%, but I think this 6% increase is probably fair, so I'm not going to change that. Net income margins, this is the thing I think will be increasing. You can see the previous numbers were 22, so let's bring this up to about 26. And the net income to free cash flow, I think this number is fair as well. But what I'm going to do, actually, 2021 was a bit out there, so we'll take an average of these numbers. That's 113%. Not much of a difference, but it will affect the price. Now it brings it up to $130 a share, which still means it's overvalued based on discounted free cash flow model. I am quite surprised at that. Even with $100 billion in free cash flow, it's just because it's not growing as fast as this model would like. But we also have another method here. This is the Buffett Graham intrinsic value. We need the expected growth rate of Apple, which we can find on Yahoo Finance. And it is currently 9.91%. Let me just add, I've already got 10%, but okay, that seems a little bit low. Let me just quickly go back to the earnings and see what Apple's earnings per share was. It was $1.20 is what it had there, so I don't know why we've got $1.70 there. Oh, it's because I hard coded this for the previous one. Let's go $1.20, and still it doesn't like Apple in terms of this. So both models say it's not a buy. Buffett Graham intrinsic value really doesn't like the stock at all, and discount free cash flow says it is a bit overvalued at the minute. Quite surprising once again, especially considering the stock has been brought down from its higher levels that it was just a few months earlier. Not massively, but still down quite a bit. Okay, what we'll do is quickly look at some technicals. We'll just close these down because I like to look at moving averages first. Let me get the moving averages up. I like to look at the 50-day and the 200-day moving averages. Why do I like to look at that? Well, because the 50-day and 200-day do tell you certain movements which can be looked at. So, for example, you can see golden crosses and death crosses. This is quite a commonly used moving average by a lot of traders. Up more? What do you mean? Oh, it's because I haven't closed these down. I'm a cheapskate. I only minimize the RSI, and that I only get 3, but I like to look at 2 anyway, so I don't need to pay. Maybe I will pay one day. I mean, if TradingView want to sponsor me, God, I'll take that. So what is this telling us right now? Well, a lot of negative sentiment, really. The price is below the longer moving average, has just recently broke under the shorter day moving average. So that was a death cross there, and obviously the price movement, once it dropped below here, were negative as well. We look back to Apple. I mean, the stock's only been under the 200-day a couple of times and has usually gone on a pretty solid run-up since then. So that could be something to look out for. What we'll do next is look at the RSI. Is the stock in overbought or oversold regions? It's probably trending upward. Yep, there you go. It's trending upwards at the minute. It was previously on the lows. When Apple gets the lows, it looks like they've been pretty consistent buying patterns, but it is got a little bit to go. You can see it does trend towards the higher side of the overbought, so you can definitely ride the wave here. But with the stock price going up another 3%, this will increase once again. And finally, let's look at one of my favorites, MACD, moving average convergence divergence. It's for looking trends at the stock, and you can see if you bought at this trend here, this would have been a strong trend, and we're still going up. So there's a couple of good things here. Obviously, the MACD and the signal line have crossed, and it crossed the 0 line on the histogram. If we compare to sort of previous times, it is at the upper side of the momentum as well. It does get a little bit higher when it did up here, but I would say this is definitely a positive momentum at the minute. If Apple does get into the negative and where they switch the other way, these have definitely been buying signals pretty consistently over the course of the last few years. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it, and I'll catch you guys next time.